Today we have a special guest, Melissa Silverman, Managing Partner of the Founders Group and President of Avenue M Advisors. I usually do not read bios, but it's fairly significant, and I really would like to spend just a minute going over Melissa's history of where she's been. You know, Melissa, as you said, is a partner of the Founders Group. She focuses on holistic business transition services, that optimize business operations. She's also president of Avenue M Advisors. It's a boutique firm specializing in business valuations and consulting. She has a background in law and multiple professional certifications, as you can see, including Certified Exit Planning Advisor and the Certified Valuation Analyst. Melissa has extensive experience in business valuation for various purposes, such as ESOP compliance, tax planning, and litigation support. And she's really played a crucial role in preparing companies for sale, due diligence, and strategic business planning across sectors, including retail, healthcare, and manufacturing. Melissa holds a doctorate degree from Nova Southeastern Shepherd Broad Law Center and Bachelor of Arts in Political Science and Psychology from Indiana University. She's a member of several professional organizations, including the Exit Planning Institute and the National Association of Certified Evaluators and Analysts. Based in Los Angeles, Melissa is an active community volunteer and enjoys tennis and golf. So with that introduction, Melissa, I'm going to have you take over and start the presentation. I'll be here and I'll be on mute, and I'll come in and out as I need to be.
Great. Thank you so much, Don. I'm very, very happy to be here. I'm going to go ahead and share my screen. So today, what we're going to talk about is assessing your personal and family readiness for a business transition. You know, when people are getting ready to transition their business, they think it's all about their business. It's not all about their business. There is readiness that has to happen from the business owner and their families to be ready for this transition and what life looks like down the road in the future. So when we talk about how much planning have business owners really done to get ready for an exit, you can see here by this pie chart that 58% have no plan at all, haven't thought about it, haven't written it down. You have 31% who have an informal plan. An informal plan is basically, it's in my mind. I know what I'm going to do. I haven't written it down, but I know what I'm going to do. And then only 11% have a written plan. They're planning how they're going to exit, what strategies they're going to use, who their team is, and all the different things that they need to be able to transition your business. So we're going to talk about that more today, but from a personal and financial perspective. Why should owners care about having an exit plan? Well, first of all, having an exit plan will help you to maximize the value of your business. If you put a plan in place and you start off and you value the company and you don't get the value that you wanted, there are things that you can do to increase the value. That's what we're talking about here. There's also making sure that the owner is personally and financially prepared. Most times when we do valuation, when we do an exit plan for business owners, we find that they haven't done any of the personal planning that needs to be done. There's a lot of work that business owners need to do here. So we spend time going through the personal and financial to help business owners really plan for the future. And then, of course, we're trying to help business owners get ready for the third act of their life, which is retirement or whatever they're going to do next. So as hopefully you all know, 50% of exits are not voluntary. We call them the 5 Ds. You've got death, disability, divorce, distress, or disagreements. These are the typical reasons why business owners exit out of a business or will be bought out of a business or one of these things. But it doesn't happen on their terms. It happens on terms that they were not planning for. And so what we're trying to do is we're trying to make it so that a business owner doesn't have to worry about not being ready. So the business owner is always going to be ready because they have put a plan in place and they know what they're going to do at any given time. So to do that, we have a process that we use. And so you're seeing the process that we use. It starts with the anatomy of choice. The anatomy of choice we're going to talk about at the end, but this is essentially a pre-sales process where we talk about what are the 5 limitations to helping a business owner get clarity around what the transition might look like, how they want to exit. We ask business owners to take the anatomy of a true start survey. It's just about 25 questions, takes about less than 10 minutes, and it just helps you to see what are the things that are keeping you up at night, what are the things that you're really focusing versus maybe you're not worried about. And then after you take it, we set up another meeting where we go over the scores. You'll get your scores right away, and you'll see some of the areas that you should focus on with your advisors. And then we talk about the business succession journey and how can we help you to plan for the exit in the way you want. And so you can see here the next 3 engagements. This is how we help business owners. We help them do a review and enhancement initiatives design engagement where we do a business attractiveness and readiness assessment, helping them to understand how attractive does their business look and how ready is it right now for a transition. We do the personal and financial assessment, which we're going to talk about a lot more today, to see how ready is the business owner, both from a personal and financial perspective. And then we do a calculated business valuation to help the business owner understand a range of value where their business fits right now. And from that, there are lots of options as to what the business owner can do. And that's where we get to the prioritized enhancement initiative plan, which we put together working with the business owner. It gets done together, which takes us into the second engagement, which are the enhancement initiatives. These enhancement initiatives focus on 5 transition goals that we're going to talk about next. And we select the most important 5 business goals and 5 personal and financial goals. And that's what gets focused on in the next 90 days. Because everybody has a lot to do. And this is in addition to the day jobs. So that's what we do in the enhancement initiatives. And we can go on and on with those as long as the business owner wants to make improvements to the business. When they want to make the decision, then we go into this engagement where we talk to the business owner about keeping and growing the company. So we just carry on, or are they ready to transition it? And if they're ready, we go through all the different ownership transition strategies. We talk about, is it going to be an internal or an external transition? Is it going to be in whole or in part? And we help them put the plan in place to achieve their goals. So when we talk about the 5 transition goals, these are the different areas. All of this are the areas where we help business owners make improvements to their business. So things like increasing the profitability and net cash flow, increasing the enterprise value, solidifying choices for the business transition. We can even help them align the owner, the family, and the team. So there's a lot of things. And under here, you can see that there's a whole bunch of things that we can help with. Over here to the right, you can see in white that we don't do it all. So here is a list of all the different advisors that we partner with who do all of these other things that we're not going to focus on. And so we partner and we collaborate with other advisors to, again, help a business owner with a holistic exit plan from a team perspective, not from a individualized perspective. So what you just saw with our process, you can see it's very similar to EPI's or the Exit Planning Institute's value acceleration process. Ours just looks a little bit different, but you can see that you're still getting in the business valuation. You're getting in the personal, financial, and business assessments. And here's the prioritized action plan. And it takes you into the preparation where you're trying to de-risk the company. And then you have the decide gate where you can keep and grow or you can sell and all the things. So as you can see, this is very similar to what we just talked about. So some of the things that business owners are dealing with on a regular basis is leaving the business on their timetable. They don't want an event to happen that causes them to have to exit the business. They want to plan for it. And they also want to make sure that they're creating financial stability for themselves as well as their family. This is incredibly important to them. And they also, it's very important to a lot of business owners as to who should get the business. And so these are really important questions that the business owners have to answer. However, before we can talk about goals, we have to talk about the vision. The vision really is the business owner's personal values, his inspiration, what he sees for the business, what he sees to unify his team, where he thinks that there should be action taken. And it helps to align the management team and the employees with what is the strategic direction for the company and how are they going to get there. Now, there's a lot of drivers and influences. So you can see here that there's a lot of different people, advisors that have a stake in this and could be a driver or could be an influencer on the business owner. We talked a moment ago about having a holistic and collaborative approach to an exit plan. This is very, very important because it used to be that a business owner would work with an investment banker and they would just help them to sell the business. But the business owner didn't do any tax planning. And so they didn't get the benefits of minimizing the taxes. And they're very charitably inclined, but no one told them to work with a charitable advisor to help give away money and be able to get benefits, tax benefits from that. And of course, you want to know what the value of your business is, but you don't know if that's the net proceeds will last. And so working with a financial advisor is incredibly important to understand and model out how long will the net proceeds and your personal assets last for you. So instead of coming at it from an individual perspective, we come at it from a holistic and a collaborative approach where we have a team, an advisory team that helps the business put a cohesive and comprehensive transition plan in place that focuses on the business and the business owner and their family, looking at the personal and their financial situation. This is incredibly important when you're looking at doing an exit plan. So who are some of the stakeholders? Well, here you can see some of the primary stakeholders are the shareholders, their significant others or spouses, their children, key employees. And then there are secondary stakeholders like non-essential employees, your customers, your vendors, and possibly even the local community. So you have to be thinking about who all has a stake in what you do with your business. Now, from a personal and financial readiness perspective, we want to talk about how ready is the business owner today for a transition of the business. And so what we're doing here is we're analyzing and we're weighing how ready is the business owner from an emotional planning perspective, personal planning perspective, their personal finances, how much debt do they have? Do they have budgets in place? Do they have a personal balance sheet and profit and loss statement? Have they done their estate planning? Have they done advanced estate and tax planning? Have they ever had an insurance review to make sure that they are properly insured as opposed to being under or overinsured? And of course, there's contingency planning, because as we all know, there are things that happen that are beyond anyone's control. And you have to plan for those things, because if you don't, it could be the difference between having your business sell for what you wanted to versus losing all the value in your business very quickly because an event occurred that you weren't ready for. So that's what we are doing here when we are looking at the personal and financial readiness assessment. So from a financial factors perspective, we're looking at what financial planning have they done? Do they have a financial advisor, wealth management advisor that they're working with? How aligned are they with the financial advisor so that the advisor knows everything about the family, what their risk tolerance is, and what kinds of investments they're interested in. There's also estate and tax planning that has to be done. A lot of business owners, you'd be surprised how many do not have their estate plans done. And it's not just about having your estate, having a will and trust put in place. It's also about the advanced estate planning, being able to make gifts to transfer assets out of your estate, being able to make charitable donations that will benefit charities that are important to you, but also allow you to benefit as well. And of course, there's risk management and contingency planning, because if we don't plan to mitigate the risk in the business or the risk in your personal situation, the debt, any contingencies that you may not have planned for that have arisen, like needing home health care that you haven't planned for, or having to take in family members and provide for them financially. These are all things that we haven't thought about, or maybe we haven't thought about, but we still have to plan for these things that could happen. And of course, there's an insurance review, because there are so many strategies that can be utilized using insurance to plan from an estate and tax planning perspective. So, of course, this is very important. Don, would you agree with that?
Yes, I believe the everything on your list there is absolutely perfect, but especially the insurance review, we see that all the time. They accumulated these insurance policies over many years, and they're not sure where it stands or do they have the right kind of insurance, and it needs a really thorough analysis of it, and we provide that service to help them understand and make that part of the planning process.
I agree with you. Then we've got the personal factors. The personal factors are aligning your goals, your spouse's goals, making sure that you're going down the same path and you want the same things. Maybe creating a family legacy is really important to you, or maybe you want a family office or foundation. Um, for some people, having a community presence or donating your time is very important to some people. For others, it's about taking advantage of their hobbies, spending time with their families, getting involved with charities that are of interest to them. And they may also want to stay involved with the business, and that's acceptable too. But you need to plan for all of these things, because if you don't plan, then it could create a lot of stress that you really don't want in the third act of your life. You want to enjoy this time. You want to be able to have less stress and be able to do the things that you want. So to do that, you need to plan for that, just like you planned when you started your business. It's the same thing. So let's talk for a moment about retirement planning. In the retirement planning, this is, doing the pre-planning before you get into retirement, and is going to allow you to be able to minimize your an estate taxes that you're going to have to pay. It allows you to make gifts and to transfer wealth using a variety of different strategies out of your estate. It's going to help you create the income or help you to be able to grow the income and allow you to have the lifestyle that you want to have in your retirement years. It's also going to allow you to appreciate or grow the assets that you have. And this is significant because this is going to help you be able to have enough throughout the entire rest of your years. So we want to make sure that we're planning for that. Then
Yeah, I
there's
believe,
also,
Melissa, I'm sorry to interrupt. I think this is really a key. We consider wealth management, as investment consulting is primary all of our jobs, but really it's investment planning plus advanced planning, as you know,
Mhm.
and that includes the tax planning and the legacy planning and the asset protection planning and the charitable, maximizing the charitable gifts. It's quite a challenge because most people really aren't aware of the strategies or haven't thought about these advanced planning techniques at all, and it's a wake up call for them, and it really helps them really get concentrated on all the items that you're bringing up here, so people understand: do I have enough money? Because that's always the question, right?
well, and Don, don't you spend a lot of time educating your client on what some of these strategies are? Because these are complex strategies, and a lot of them have never heard of this before, and they don't know how any of this works. And so they need to be educated on it.
Yeah, the education's really critical. It's not that they need to know the super detail of all the techniques, but they need the broad techniques, especially in, certainly in charitable planning, tax planning, asset protect. All those strategies just need to have a high level view so people understand them. Then they can go deeper if they're a technical person. But it's very important.
I agree. And then we talk about insurance. And Don, you can probably go through all of this, but making sure that you have a buy-sell agreement in place, making sure that you fund it so that if you need it, you have the money is there and you will get the money in case one of the 5Ds occur. And there's different ways that you can do that. And Don can talk to you about all the different ways that you can do that. Making sure that you might have key person insurance. There might be some key executives or key people in the company, and you may want to have insurance on them. There may be some employee benefit plans that you want to make sure that you attract and retain your key employees throughout the transition of the business. You don't want them going anywhere because that could derail the whole transition. And so making sure that you're putting these benefit plans in place is very, very important. And you have to
Yeah,
plan for that.
yeah, the advantages of what you're talking about is really helping them understand there's more to it. They're busy. Everybody's busy. Everybody has no time. And it's very hard. They do things over their lifetime and building the business, and they piecemeal it throughout their life.
Mhm.
And then they get to a spot where, oh my God, they don't know where anything is, or if they're okay or not okay. So having this process in place really helps them. We've noticed that tremendously. And they feel so much better just understanding that they have somebody to guide them, like yourself and myself, in
Yep.
the process. It's enlightening, really.
It is enlightening. Then we have risk areas, and everybody has some risks that they have to deal with. But here we're talking about risk in your personal situation, risk in your financial situation, as well as in your business. And here you can see what some of those risks are. We've talked about some of the personal ones, but from a financial perspective, what happens when you're no longer earning a salary and bonuses and distributions and employee benefits? Are you prepared for that? Are you prepared for just receiving passive income? From a business perspective, there's a whole lot of things that you need to plan for. And we do this as part of the plan. And so first, we're always going to look at what are the drivers and what are the influences. And here you can see that there's lots of drivers and there's different influences that can impact or have an effect on the business owner and what they do. We also create action plans, and these action plans are going to focus on what are the most important improvements that we want to make in the business or in the personal financial assessment perspective. What do they want to fix in their personal lives? And we're going to focus on these over the next 90 days. And so this is just an example of what one of these action plans look like. So we talked about, when we talk about alignment, there are a lot of different enhancement initiatives that we can work on. But some of the ones that we typically start with include family conflict resolution. 9 out of 10 times when you have a family business, there is conflict either with the parents and the children, or between some of the family members that are working cohesively with each other. Maybe they're not working cohesively. And they have to have this conflict resolved, because until that conflict within the family, until it gets resolved, there is no transition that's going to happen. You're not going to be able to sell your business. You're not going to be able to transition it to anyone. No one's going to want it while there is infighting going on. So that has to be taken care of before you can focus on anything else. And then we've
Yes.
got the nine.
I'm sorry. Yeah, we've really witnessed that firsthand over the years, where they started down the road with not a lot of planning, and they had all kind of family conflicts going on, and it turned out disastrous, and it really separated the family multiple times and multiple transactions. So, we've seen that firsthand, and a lot of our, we're able to tell our other people that we're working with about that, just to give them education about, what you really need to think about this, and it really helps them understand that, we're probably going to have some issues and we need to talk through that.
Yep. And again, we're going to focus on 3 to 5 of these different improvements, and we're going to focus on them in the next 90 days. Why do we do 90 days? The reason that we do 90 days is because we have to have enough time to be able to make the improvements. And remember, everybody has their day jobs too. So this is in addition to the work that they have to get done every day. And you have to have time to make the improvements and to be able to show your results. So that's why we focus on it over a 90-day period. And then we'll go on and identify what are the next set of improvements that need to happen. Now, this slide, I just want to talk about for a moment because it's a really powerful slide. This talks about the different stages of business. And what you're seeing here is you got stage 1 to stage 5. And in stage 1, the owner is focusing on the vision and drive. The owner is attracting and engaging customers. And he's supported by the team working with the customers and the admin. When you get down to stage 3, you can see that instead of the owner doing everything, now you've got the leadership doing it, and they're supported by the owner. And you've got leadership attracting and engaging customers supported by the owner. And the team is working with the customers and administration. And then when you get to stage 5, the owner's out of it. Now you've got leadership that's working on the vision and drive, supported by the team, not the business owner. And the team is working on attracting and engaging the customers, not the leadership. And the team is also working with customers. So the further along you get, the more valuable your company is going to be. So a company that's in stage 1 is going to have the least amount of value for their business. Whereas stage 3, they're going to have more value. They're not going to be as valuable as you would be in stage 5. But you can see the different stages. And the most important thing is business owners and businesses go in and out of these stages. Some point in time, you might be in stage 3, and then something happens and you go back to stage 2 or stage 1. And then you put in new processes and new people, and you end up in stage 4. So this is a constantly evolving stage that business owners go through with their business. And so it's really important to know where are you and what are you trying to get to with your business. And I think that this slide really helps you to do that. Now, when we talk about the value, of course, we're talking about the highest value for the lowest cost. So here you can see how there's different places that you might be. And so we have to look at how much time, how much effort, and how much money gets spent to do these things. The next one is prioritizing the improvements that you're going to make. And when we focus on this, we do it in a specific order. The first thing that you want to focus on is de-risking the business and de-risking the business owner, because the more risks they have, the less they're going to be worth. So we have to make sure that they have taken all the risk out. That's where that insurance becomes really important, because there's so many different strategies that can be utilized to de-risk the family and the business owner's personal situation. Then we're going to focus on strategy and then efficiencies, putting processes in place, putting plans in place of what you want to do, how you're going to do it, when you're going to do it, and then how are you going to grow? And then you focus on the culture. So you can see that as you go up, you are focusing and you're focusing on these things. We get to the point where you're focusing on what goals do you have and when do you want to accomplish them, and how do you want to grow your personal well-being. And along with that comes everything else. So working on it in a specific order really helps you to determine what it is that you want to do and how and when you're going to do it. And the really nice thing about this is that they're written plans and they evolve. These are living, breathing documents that can change as your life changes, and they should be changed on a regular basis to reflect the new things that you're going to focus on. So this slide just shows really the same thing that we've been talking about, just in a couple of different ways. So again, when we're talking about personal and financial readiness, we're talking about what are the personal factors that are really important to the business owner. And every business owner, there are different things that are really important to them. And what are the financial factors that are driving them to take the steps that they're taking? Or maybe they haven't taken. Maybe they're concerned, maybe they're scared, maybe they don't know a lot about it, and so they just haven't done anything in these areas. But you need to become educated. And there's a lot of advisors who may say that they can educate you, but make sure that you're working with the advisors who can really provide you with the right education so that you understand what these things are and you understand how it's going to benefit you and your family. And then you can make an informed decision. That's what we're trying to help you to achieve. So again, we talked about the process. We start with the review and enhancement initiatives, design, engagement, which we've talked about. And then we have the enhancement initiatives, which we've talked about. These are the transition goals. Sorry about that. And making sure that you're focusing on them over 90 days. And then the decision is all about, what does the business owner want to do? Do they want to keep and grow it, or do they want to transition the business? And if they want to transition it, is it in whole or in part? Is it internal or external? And we want to make sure that we can help them achieve their goals. So again, here is the process that we have come up with to help business owners. There are other processes that are out there that help business owners as well. We just think that this is a process that really allows the business owner to become educated, to give them time to gain trust in the advisors that they're working with before they do a lot of things, and provide a lot of value to the business owner by making them think about things that they haven't thought about before. getting them to realize that there are steps that they have to do, and they have to do it now before they are ready to exit the business, so that they will be ready. And anytime an unsolicited offer or something happens, their business is ready and it can be transitioned on a moment's notice. So with that, I would like to just mention, we have this, I talked at the beginning about this anatomy of a true start survey. And again, it's a 5 to 10 minute survey that it just literally asks you a question and it gives you 2 responses. And you're just going to pick which one is most applicable to you and your situation. So if you would like to take this survey and see where you are at, you can text to the number 858-256-1165 and put the code in DSRRFP24. You will then have to enter your name and your email address at the prompt, and it will send you the link to the survey. Again, the survey takes about 5 to 10 minutes to take, and it will allow you to see how much clarity do you have in your business and in your personal financial situation, and how ready are you right now to move forward. So again, if you want to take the survey, and we encourage all business owners to take the survey, text 858-256-1165 and put the code in DSRRFP24. With that, I'd like to turn it back over to Don.
Yeah, that was great. So, I see after you start to educate folks, business owners in the beginning, is your really next step going through the valuation. Companies need to get that valuation and personal assessment and business readiness report. That's where you're really starting out and getting an idea of how well the company's running and any enhancements that you have to do to get it, humming the way they want to. And then you move on to the advanced planning component. Is that right?
Yeah, typically what we find is a lot of business owners have never had their business valued. And so they want to start with that because they have no idea what their business is worth. So if they don't have a value to start with, they don't know what planning they're going to be doing. And so that's why that valuation, the calculated valuation, is so important that you do it as quickly as you can.
So when they first come to you, then do they have any idea what they have a number in their head typically, and then how does that all the plans that you've been through, how does that actually translate in when you're all said and done? Is it typically they think it's a lot more or a lot less than they originally thought, or is it all over the board?
It's all over the place. We've worked with some business owners who thought that their business was worth X, and their business was actually worth Y. And finding that out was so important to them because it changed their mindset completely. Instead of looking to do an external sale of the company, what they decided based on the value was that they needed to put in the leadership team and be able to bring in that next generation so that they could not have to work so hard, but the company will continue to run itself. And then in other situations, business owners are absolutely astonished with the value of their business because they just didn't have any idea that their business was worth so much. And a lot of times, one of the most important thing is most business owners have no idea what the intellectual property in their business is worth. And sometimes business owners don't even know that they have intellectual property. And that can be the most valuable part of the business. So understanding what the value of their business is a big starting point for a lot of business owners.
So I know, there's a lot of detail. This is a big project. And we have a lot of business owners that are so busy. It's really hard to break through to just even, get them to do anything.
Yes,
So,
it is.
we've worked with you, as you know, with various companies, and we've seen the process, and we see how detailed it is. But what could you tell our folks on the line on the line today about, how does this all get? Can you get this done? Do you have periods where you just can't get it done because the owner just can't get focused, or doesn't have the time, or just doesn't get it?
We see all of that. We have a client right now that we've been waiting 6 months for them to get us their information to start on the valuation of the company. So, depending on how busy a business owner is, it can take a long time. But what we find is when they start the process and we're able to get in there and start with the assessments, yes, the assessments take some time, and the business owner has to be willing to put in that time. But what they find is what they thought was going to happen, it's completely different than what they initially thought going into the session. And so when they come out of the sessions, they have a completely different mindset because they've learned so much and they've been informed about so many different things that they haven't even thought about yet, that they
Mm.
start to realize that there's a lot that they have to do.
Yeah, my biggest aha is really business owners not understanding what the net effect is for income. So just like you had mentioned before, you're taking all these benefits out of the company. You don't even realize how much you're taking out of the company. You don't realize that on a $20 million business, you might have $4 or $5 million in capital gains tax. And then when it's all reduced down to the final number, you're making half, living off that passive income, as you talked about, as opposed to just keep running the business. So I find that was the biggest aha moment for me, as dealing with all different types of business owners and sizes of business owners.
Well, I'll tell you, that's one of the biggest aha moments for the business owner as well.
Mm-hmm.
Because the business owner always thinks that if I sell my business and I get what I want for it, I don't have to worry, I'm going to be fine. But what they didn't plan on are the taxes, the transaction costs, and the different fees that they're going to have to pay to get all of this done. And so when they actually look at what they actually take home, because they didn't do the planning, it is a whole lot less than what they thought it was going to be. For the business owners who do the planning ahead of time and put some of these strategies in place, they find that they are able to keep so much more of the net proceeds than they ever could have imagined. And then for other business owners, it makes them come to the realization that selling the business may not be the right strategy for them. And they may have to come up with a different strategy for what do they do with the business. And that's where, all of the benefits that you get out of the business, becomes really important to the business owner. And they can't let go of that.
Yeah, it's quite a conundrum for sure. But I really thank you for talking to us today about this. This is very important to all of our clients. And at Retire Right, we really spend our focus is on affluent families and business owners in transition. We're looking for business owners that are looking to transition in the next 2 to 5 years, and it's quite a journey. And I really would tell people to really get started early. There's a lot to it. There's a high cost to it, but is it really a high cost? It's the old story. How much value you bring into the table. We've done deals, I call them deals, but we've done deals where it's cost us a lot of money, but we got 10, 20, 50 times the value based on cost versus the value that the taxes we saved, and getting them organized and helping them with their family and transition issues of what to do there. And they have no idea how to do this. And this is so critical. And they would save so much time and effort and money just by taking a little bit of their time and walking through this incredible process that you've created for, our clients as well as obviously all of your clients. Do you have any final words or final words of wisdom, Melissa, to help our business owners light a fire into them, so to speak, to get started on something, even if they're years and years away even?
So I think the best thing that I could tell business owners is just what you said. Even though the business owner thinks they may be years and years away, you cannot start early enough to plan for the exit of your business because you never know what's going to happen on any given day. And anything can happen. And, you could get an unsolicited offer. You may get them every day. And you may get one out of the blue and you're like, wow, I really need to think about this. If you do the planning ahead of time, the way we help you from a business perspective is we help you get ready for a due diligence situation. So if you ever get an unsolicited offer, you will be ready for it. And from a personal and financial perspective, if you have done the planning, you will be ready to move on anything that comes up at any given time because you have focused on what needs to be done ahead of time, and you can never be too ready to transition the business.
Okay, thank you very, very, very much. We so appreciate you coming online and going through this with us.
Don, thank you very, very much for having me.
Yes.
I hope I provided some value. And if anybody has any questions, you can always reach out to me. I'm
Okay.
always happy to answer any questions.